Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So in weekend, now a weekly report, we said that, well, actually we have two scenarios here. It's possible direct upward continuation to the previous top, it's around 23.50 area, 24. Or we still could get some deep retracement that could become the perfect chance to take the long position in the euro currency. Although in the longer term, in the weekly chart, as we said, it is possible the market could reach even this level and to form reverse head and shoulders before upward continuation. In the shorter term, since this level stands too deep below the daily oversold, it's not very interesting to us currently. But this level looks interesting just because, well, it forms the rock hard support. It's confluence, 50-60 area, oversold, and a few targets on intraday charts. Creates the agreement also at this level. And that's very attractive for taking the long position. But the tricky moment is we are not sure that the market definitely will go here. For the daily traders who trade on the daily charts, this is not the question. So you just need to wait when the market will reach this level, because on a daily chart we have only a single setup with taking long position right around that level. With the divergence on board and the MACD showing bearish trend, we can't just take the long position right here based on the daily chart. We need to wait. But on the intraday charts, there are a few steps and well, a few levels that you could consider to make the judgment of the price behavior. So whether the market will go straight up further, directly right from here, or indeed downward action should start. In general, why we do not exclude the chance that market still could show some deep retracement, kind of the ABCD pattern here, just because currently the sentiment stands so, the expectations from the investors on coming European Central Bank meeting, well, it's not really big expectation stands around it. So mostly market currently expects that everything will remain the same. This was the J7 meeting that we also have mentioned in our research, and Janet Yellen strongly, let's call it, recommended to proceed with the supportive measures and said that inflation will be, well, transitionary, so it will be a temporal measure. Later it should be normal. So this background, European Central Bank probably will go in the same way as the Fed and hardly will change something. So if last month there's really big expectations that the Fed and the European Central Bank will change something, currently these expectations are fading. Now, just not a lot of traders who expect some changes from the European Central Bank. And in general, it's a really, well, big curious situation in the market is that actually market reacts not to the real data that we have, I mean the statistics with the rising inflation, but it reacts on the Fed policy. So if Fed said that's no inflation despite what the indicators show, it means that no inflation. So currently the question, who is wobbling? The dog is wobbling the tail, or the tail is wobbling the dog. So it seems that the second suggestion is more correct in current circumstances. But that brings a lot of risk currently, because once Fed will change something, the change could be, well, dramatic, and it could lead to just explosive action on the market. So still in the current situation, these two reasons that positive CPI could be released on Thursday, so we suggest this might be also bring some support to the United States dollar, as inflation indicators of the inflation currently shows good numbers, as between behavior of the European Central Bank also will be negative for euro currency. And from that standpoint, we will not exclude that indeed this market keeps chance to go lower. From the technical point of view, if we'll take a look at the fall time frame chart, yesterday market has moved slightly higher and reached 618 resistance. But currently it's a major question what will happen around it. To speak about direct upward breakout, market has to start moving back to the top, breaking 618 level, return right back up. And if even positive CPI will be released, central bank will tell nothing, and we could get some bearish reaction, it will be not as a new leg on a daily chart back to the 2050, but it may be just back to the 2150. So market could form some kind of bullish reversal hand shoulders pattern here on top. So market returns back on top and shows minor pullback based on the good numbers, and then reestablish upward action. But for that scenario, market has to move higher and move above 2215 area, so starting moving back in this area. Until this will not happen, chance on the second leg back to the 2050 exists. You can see currently market is reacting on this resistance level. Besides closer to the numbers, to the Thursday when the numbers will be released closer to central bank meeting, investors will become more careful, and it probably could be some position closing before that. Anyway, currently in this reaction, chance on the second leg still exists, and that's the target, by the way, that I'm talking about. That creates an agreement with the same confidence support. Based on the hourly chart, we'll take a look at the trend lines. You will see what I mean about the breakout above 2215. Because here is staying some support line previously, right? I'm not taking into consideration this CPI breakout, or price consumer index probably. So it was holding rather well. It's a breakout, now it becomes a resistance. And here is another line. So if market will break it up and return back above this trading area, that will be the sign that market is preparing for the further upward continuation. Until this will happen, we still could get some kind of A, B, C, top, D pattern back to the 2050. So that's what we see currently on the euro currency.